Hi everyone, welcome back. I'm Ruben Torrens. Before jumping into the topic for this video, into the guaranteed income supplement, and why I talk so much about the guaranteed income supplement, I'd like to make a little announcement. I started a new YouTube channel called the Senior Nomad. This is because my wife and I will decide to retire in a warmer place in Canada, or at least spend winters outside Canada. But now we find out that living outside Canada is not only warmer but cheaper. So we start traveling, and uh, we took a lot of pictures and recorded a lot of the video clips that I like to share with you guys. But I don't want to do it in the same channel that I talk about retirement all the time. So I have two channels now. One, the boring channel, which is this channel about retirement planning and taxation, and the other channel, which is the fun channel, which is the channel for traveling around. So take a look. I will include the link to this channel on the description of this video, just below the video. And now, yes, let's go into the guaranteed income supplement and why a lot of people is asking me why I always talk about the guaranteed income supplement. They say, well, the reason why I do it is because nobody talks about the guaranteed income supplement. Somebody has to do it. And here is the reason. This is the number of seniors receiving all-day security and the guaranteed income supplement. The total number of seniors in Canada receiving these two benefits for February of 2024. I copy this from the government pages and pasted it. As you can see, I have February in English and in French because I copied it and I pasted it. Province by province and the totals. And in February of 2024, we had 7,165,000 seniors receiving all-day security. Actually, pretty much, this is the number of seniors living in Canada because most seniors receive OAS. And out of this 7,165,000, 2.5 million were receiving the guaranteed income supplement. So that means that 35% of seniors are receiving guaranteed income supplement. And if every senior that qualifies for the GIS will be receiving it, this 35% will, I venture to say, that will be anywhere from 40 to 42%. Why am I saying this? This is the reason. This is the number of new all-day security and GIS benefits month by month for one full year, starting from July 2022 until June 2023. Why I'm choosing July till June? Well, it's very simple because we file the income tax in the first 3 months, 4 months of the year, and then with CRA. And then CRA sends our tax information, how much money we earned the prior year, to all-day security, to Service Canada. And Service Canada adjusted the all-day security amounts, the payments that we received from July of that year until June of the following year. So this year, now in July, our all-day security, and for those that receive guaranteed income supplements, will be adjusted based on 2023 income, and that will be up until June of 2025. Okay, so what happens with all-day security and the guaranteed income supplements? Well, most people, most Canadians qualify for all-day security, to receive all-day security. But to receive guaranteed income supplement, the rules says that you have to be receiving all-day security and your income has to be below a certain threshold, depending of a bunch of things. So here is what happens. If we have, under that concept, if we have 10 new people receiving all-day security, chances are that we're not going to have 10 new people receiving guaranteed income supplement because not all of those 10 will have an income below the threshold. Okay, so the number of new people receiving guaranteed income supplement is always should be lower than the number of new people receiving all-day security. So, and that happens in every month. We pick any month. This is January 2023, 36,280 new people receiving all-day security, 20,000 new people receiving guaranteed income supplement. But if we pick on July, the month in which everything gets adjusted, So we noticed that we have, in July of 2022, 32,867 new people receiving all-day security and 180,926 new people receiving guaranteed income supplement. How did this happen? Why do we have approximately an extra 150,000 people more new people receiving guaranteed income supplement all-day security? Well, simply because this 150,000 people is the people that fell through the cracks, didn't receive guaranteed income supplement when they should, and then the government catch up at tax time and they said, oh, yeah, their income is too low, we have to pay a guaranteed income supplement. By then, they lost guaranteed income supplement payments for up to 1.5 years. Okay, and this is not something that you can recover if you're in the situation. This is why it's so important to determine if you will be eligible to receive guaranteed income supplement way ahead of time. And here is how you do it. So there is a process to do that. So I'm going to walk you through the process. You need to know certain things. You need to find out about your Canada pension plan, how much money you will receive at age 65 from Canada pension plan. How do you do that? Well, there's two ways to do it. You can request a statement of contributions, which if you have access to My Service Canada account, which is to your Service Canada account online, so it's called, if you type on Google My Service Canada account, you will get all the information on how to register. So you can get your statement of contributions. It will tell you approximately how much you will receive at age 60, 65, or age 70. Or you can request a pension estimate. If you Google Canada Pension Plan pension estimate, you will get a form to complete, send it to Canada Pension Plan. They're going to send you a pension estimate, which is a more accurate amount than the statement of contributions. But in either case, it's good enough information to find out if you will be eligible to receive guaranteed income supplement or not. So then you need to know more. You need to know where your money is going to come from at age 65. So you need to know if you have an employer pension, and you should know if you have an employer pension. If you do, you can have one of two pensions, a defined benefit pension or a defined contribution pension. Within the defined contribution pension, there may be other names like DCPD or other names that at the end of the day, they're the same thing. Okay, so the big difference is that the defined benefit pension, very few people have this type of pensions. Mainly, you have to be a government employee to have this pension, but check with your employer. The defined benefit pension defines exactly that, the benefit. It tells you how much you will receive at age 60 or 65 or whenever you retire. So for that, you need to look at your pension statement or check with your employer. And if you have a defined contribution pension or any other defined benefit, you may have a group at RRSPs, a deferred profit sharing plan, or any other type of pension that will accumulate money. It's pretty much like an RRSP, a savings account. And you will have so much money at retirement time from that amount you will withdraw income. Okay, so I hope you deal with a financial advisor. Most people deal with a financial advisor. If you have an RRSP or a tax-free savings account, you most likely you deal with a financial advisor at the bank. But financial advisors typically don't do the job that they have to do. So go to your advisor and tell them, I have this type of pension. Can you tell me approximately how much money I can expect to get at retirement time from this pension every month? How much will be my monthly amount? Your financial advisor should be able to tell you this. And if it's they can't do it, they don't know how to do it, well, it's time to change advisors. Okay. So these are the two things, the two sources of income that they're fixed, they're unavoidable. Canada pension plan is mandatory, and the employer pension, if it well, is not probably not mandatory, but most people, if you work for an employer that has an employer pension, most likely you're a member of the pension. So this is unavoidable. But then you have your options, which is other income. Where does other income comes from? Well, rental income, investments, RRSPs, royalties, whatever other income that you decide to make that investment. So this is what you're going to decide based on this type of incomes. Why? Because once you have this information here at the top, then you're going to go to my website, www.pensionbooster.ca. Don't worry about writing this thing down. So the link will be on the description of the video, just below the video. And then calculate it. Let me show you how that works. Here on the website, I have 5 calculators. If you've never been on the website, just go to www.pensionbooster.ca, register, is free, watch the tutorial video on how to use the calculator. But basically, there are 5 of them. Calculator number 1 is always for people age 65 or over, because this is what it calculates is the guaranteed income supplement. So calculator number 1 is for a person that is single, widow, or divorced. In other words, is as one single person filing the income taxes, an individual. Calculator number 2 for a couple that they're both spouses or common law partners at age 65 or over. Calculator number 3 for a couple in which one partner is age 65 or over and the other one is 59 or under. Calculator number 4 for one partner over the age of 65 and the other partner between age 60 to age 64. When this partner gets to age 65, they're both going to be over the age of 65, and then it takes you back to calculator number 2. And calculator number 5 is for survivor spouse, age 60 to age 64. This is the least used calculator of all. So to run this example today, I will choose to use calculator number 2, assuming that we have 2 spouses, age 65 or over. Okay, what do we find here? Well, the blue cells are the cells in which you can enter information. On the top cells, you enter the number of years for which you have been a resident of Canada between age 18 and age 65. So 40 is the maximum, so that way you get maximum all-day security. If you enter any other number than 40, 30 for example, and you recalculate, every time you change information, you need to recalculate down here. So then it's going to change the amount of all-day security. But for the purpose of this example, I will use 40 years, because if you have less than 40 years of Canadian residency, chances are that RRSP is definitely not for you. Just look at my other videos where I talk about this topic. Okay, so what do we get here? The default is that it shows you the all-day security, the amount that you will receive. This amount is the current amount for the period April to June 2024. So it's $713.34 per month. And if there is no any other income, everything is at zero. So the default is $641.35 of guaranteed income supplement. But of course, you were inquiring first how much money you will receive from Canada Pension Plan. And let's say you will receive, Canada Pension Plan tells you that at age 65, you will get from CPP $750, and your spouse is going to get another $700 just per se. Okay, so now when we recalculate, you will see the amount of guaranteed income supplement will change, will get down to $232 each. Why? Because guaranteed income supplement is based on other income. If you don't have any other income, then you get maximum, and if you have other income, then start decreasing until it reaches zero. So here you have your government pensions calculated, and you have $232 each from the guaranteed income supplement. So what to do with this information? So what you do is basically, give or take, here is what happens. This is the situation. For any other income that you're going to bring in, for every $1 of RRSP withdrawals, any $1 of net rental income, any $1 of interest paid, interest received, so you will lose 50 cents of guaranteed income supplement. This is now fun, guys. So $1, 50 cents, $100, 50 bucks, $1,000, $500. Okay, so this is a lot of money to be lost. So it's like paying 50% tax. So therefore, if you take this amount of guaranteed income supplement and you say, okay, I have $232, so 232.59 times 2 people, so that's $465 per month that we will receiving. So we have to multiply that times 2, because to lose it, we need $1 to lose 50 cents, correct? So then we need double that amount. So if we multiply that times 2, you have to bring an extra $930 to lose the 232. So if you bring $930 per month, so the guaranteed income supplement will be all gone. Okay, if you bring $920 per month, $120 per month, the guaranteed income supplement will be just a little bit. See, $930 per month. What does that tell you? That $930 per month will be taxed at 50%. Okay, so if $930 per month, you time that times 12 months, that's $11,164. And if you're thinking of saving in RRSPs, if you don't have an employer pension, you don't have any other mandatory source of income, your only way of savings is RRSPs, then you will multiply this time, let's say 20, because you will live 20 years in retirement. So you will receive this amount of money during 20 years. For 20 years in a row is going to happen, right? So because you're going to live from age 65 to age 85 in retirement. If you think that you're going to live to age 90, multiply by times 25. Okay? So if this 11,164 times 20 years, so that will be $223,000. Meaning that if you are in target to save $223,000 in RRSPs by retirement age, so your entire amount of money will be taxed at 50%, because you will lose half of that money in guaranteed income supplement. Now, here is what happens. If you are in target to save double that amount, say $500,000 in the year, by retirement time, then, well, once you lost the guaranteed income supplement, it's gone. Now it gets reduced to only, it's going to cost you only 25%. But this will give you an idea of if you should save money in RRSPs or not, if RRSP is your only source of income. Now, however, if RRSP is not your only source of income, if you have any other income which is mandatory, such as an employer pension, and say you will receive $1,000 per month from an employer pension, and you recalculate, well, then go right ahead, because your guaranteed income supplement is gone already. So just you can save in RRSPs, because it's a good thing for you. My apologies for making it so complex, but this is not my fault, guys. This is how the government sees it and plan it. If you have any questions, you can ask me. You can contact me at the contact information on the description of the video, or you can go ahead and make it on the comments of the video, and let me know if this is too complex, if I have to try to make it easier or explain it with more time. Other than that, thank you for watching. Hope to see you on the next video. Make sure that you check my other YouTube channel, which is a fan channel, and I'll see you soon.